Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is, what's today? Thursday, February 11th. Good to be with you guys here. This morning, what a night. I hope you guys caught some of this volatility. We have a lot of stuff to cover, so I do want to jump right in. As always, questions, trade setup, specifics, anything you want to address, please feel free to mark it down in the message board here. And I just want to caution you guys, it's a very volatile session. So as we go through these setups, if there is something that you want to take a look at real quick, just drop in the box and we'll go take a look. But things are on the move. So we're seeing a massive risk sell-off. If you saw the yen pairs, or specifically, I guess the first thing you should just take a look at that'll be the biggest tell is gold. It rocketed right through that key resistance, right through that longer-term trendline resistance, right into that longer-dated 2618 we talked about yesterday, just shy. Okay, the high today was 1242, actually right on. 1242, must have like 10 cents. So big tell, okay, on what's going on over broader in the risk market. Here's what the relative performance of the dollar looks like so far, okay? Big gains in the yen, big gains in the euro, funding currencies that are seeing strength when we get risk on these days. And then the losers, all the com block, and even the pound here, the biggest loss down 0.87%. So we'll take a look at that as well. Really quick before we jump over into anything else, I'm going to bring it back to the dollar index real quick. I just want to show you the relative performance of the greenback aside, putting that aside. We looked at this yesterday. Here's what markets are factoring in as far as Fed futures. And remember when we looked at this yesterday, we were looking at the probability that we'll see 0.25 to 0.5 pretty lean, and then the 5 to 75, which would be a next basis point cut, that was really starting to surmount. All of that's gotten done. In fact, now markets are participants are factoring in a 12% of a possible 25 basis point rate cut. All the probabilities of rate hike have all but vanished until end of Q4 this year, start of Q1 next year. Very strong tell, guys. Okay, so if the strength that we're seeing in the dollar is based on the account that the Fed futures are predicting that we're going to see those 4 interest rate hikes this year, if that's what the dollar has been rallying on the premise of, certainly that leaves the index at risk here with this decline. Remember, yesterday we talked about the focus range to start off the week was 123, 12,049. We bobbled against both of these twice this week. Here's the downside break. Do keep in mind you have the 200-day moving average, which could offer some support on the close today. The broader bias, at least in the immediate forefront, stays bearish sub 1249. Near-term support, and specifically if it happens today, nice confluence region here, the 50%, which coincides very well with that lower median line parallel. All right, so watch this index very carefully. It's a little bit deceiving because the yen strength that we're seeing certainly is offsetting some of the losses that you're seeing in the sterling and the Aussie. So as far as the broader performance of the dollar versus each of its major counterparts, you want to make sure we're taking each trade on its own merit, okay? Because the dollar index is not really giving you a clear picture here. You'd think on a day like this, there wasn't much going on. Obviously, there is. So quick tidbit there on the dollar index. I didn't include that yesterday, so I wanted to review it real quick before we jump into the meat of the charts. If there are no other questions on that, we'll jump in. Eileen, good morning. Thank you very much. Great to see you. Mario, cheers, sir. To everyone else in the room. So let's get started. First one's first was Kiwi dollar. As a disclaimer, I am in a position there on Kiwi. I told you guys yesterday we were in a short. As soon as this thing spiked into that 200-day moving average, and specifically when it teetered out near that soft target 67.20, that was like a tell and a really nice give in as far as the entry for the short side. You had a really nice momentum trigger on the 5-minute. I'll show you that in a moment, which got us in. The initial target that I noted yesterday was the 200-day moving average at 66.69. Secondary target was right down here at 66.75. Unfortunately, we got out on that drop. You did have a lot more downside in European trade, wasn't up for that, but you did go all the way down, tag that before reversing back up. So here's what Kiwi dollar looks like right now on the 30-minute. So again, here's that spike into 67.20. There's a really nice short trigger right here on the 5-minute. Even on the 1-minute was a clear trigger to the downside. Again, looking for about 27 pips per scalp. We booked 30, I believe, right around the 200-day moving average. And then we booked another 50 as we got into that major support barrier. Actually, let me just show you. No clue. What was your clue that Kiwi was turning around there instead of the rally higher on that spike? The short-term triggers? Well, there were short-term triggers, but there's a couple of things, Eileen. Remember, price in and of itself is not going to tell us everything. We have to have an opinion. And if you note the report from the previous session, Eileen, we were looking, the ideal scenario would be to see Kiwi make another run at the highs on the 200-day moving average at 67 essentially before reversing lower. So we're just following the train, we're just following the plan, Eileen, right? The market went right in. There's that 200-day moving average, overshot it, failed at last week's highs, and then you got a near-term trigger and momentum. There you go down. You never know for sure, right? But we had a plan. We had a plan to look for a rally to sell near the 200-day moving average. It overshot by a little bit. A stop here was very tight. It was just against this stop. So you had that room for conviction. And even though, like I said, even though it dropped much lower, we have to be prudent. Our strategy dictates that 27 pips is the ATR target. Every time we hit 27 pips, it takes them off the table. Maybe this will help. Let me just show you the live chart. Here's what the live chart looks like. All right. This is a 5-minute. I'll show you in a 1 minute. You had a trigger too, but two things that you want to take into account. First of all, the break back below 70 in and of itself is going to be a sell trigger. Now, we don't just do that anytime we see momentum break 70. Price was at resistance. This is why the trigger makes sense, Eileen, right? I didn't just sell here because I saw that trigger, but we're at resistance. It's at the 200-day moving average. We were looking for a spike high to sell. We're just following the plan. So we have an opinion on the market. And then the triggers are there to tell us, okay, the market's moving with our opinion or the market's not moving with our opinion. But we don't decide bias by just the oscillator. So long story short, you take a trigger there. You had even another subsequent trigger there that was a little bit bigger because that was a 3-point touch. And as soon as we got 27 pips, first limit, again, once I saw that high had been made, I tacked on a quick retracement off the low. 50% came in at 66.68. I told you guys 66.75 on the report, but we were able to grab a little bit more on that second one. Okay, now if I were up for this, what I would have done is taken off a quarter here, left a quarter left on the trade, and then bring the stops back to this swing high and have another 25 pip stop down there. I didn't want to have open market exposure heading into today, and here we are right back to where we started. Right now, right here, we're holding a short from earlier today just now because there's a near-term trigger again that gave out against resistance, right? Just in price. Also, tack on a quick retracement of the decline. You can see that we struggled to hold that 618 and came right back off. Does that make sense, guys? Eileen? Seemed the pair was broader, higher, and dollar weaker, but I didn't understand at the time resistance there at the 70 RSI break. Right. I mean, look, you could have taken a long here, absolutely, 100%. If when this broke the U.S. opening range high, the only problem is you didn't really have a conviction stop, but that would have been absolutely a decent near-term trigger. It's right here. But guess what? Even if we took this trade, we know, like we mentioned here on Sunday, that we're just looking for a rally to sell into. So yeah, maybe this was a long trigger for you that you would have taken. Great. The break back below 70 would have got us out of the long position. For me, I was stalking that high for a short trigger. Make sense, everyone? We on the same page? Makes sense. Thanks. All right. Cheers. So that's Kiwi dollar. Again, that near-term trigger has me short again. I would only be looking for a move on this. Let me just show you what I'm looking at. I'm only looking for a basic 38.2 on this drop here initially. So like 67.50 would be an ideal spot for me to start cleaning up that trade. Remember, we're only looking for 27 pips per scalp, so we want to stay, in tune with our discipline. And we'll see if we can get some more downside here. I just don't think we're going to see a massive dollar sell-off per se with what's going on. All right, so that is Kiwi dollar. Any questions on Kiwi before we move off? It's interesting with what's going on in the broader risk markets that this is not really giving us a little bit more volatility than that, but certainly you're seeing a lot of repricing. A real quick look at what the equity markets are doing, guys. Here's what it looks like. Europe is a mess, okay? You had the DAX, actually came back a little bit, but you had the DAX down 2.3%, 2.15% rather, excuse me. CAC 40, France market down 3.3. Asia was a very similar situation. You saw the Nikkei down 3% on the session. ASX 200 Aussie market was one of the only markets that bucked the trend with an advance of 0.95%. Okay, let's jump into the other subsequent setups. Okay. So that was Kiwi dollar. Second up on tap from yesterday was CAD yen. Listen, a trade that is just simply playing this median line like a fiddle. The first target that we talked about, 80.87, that hit just minutes after we published this. The second target at 79.89, that has also been hit earlier in overnight trade. So here's what CAD yen looks like. And again, a nice wide range scalp. Last time I checked, it was about 45 pips per move. What are we looking for, CAD yen? Right on, 45 pips. Okay, and look at this formation. I mean, it's not too often, guys, that you get a formation lasting for multiple weeks that is that crystal clear. Obviously, you overshot the 88.6 here. If you got caught holding the short on that still, it's the break back above that confluence should be the trigger to jump out of that short. So if you were holding a short from here and you thought that this run was going to give you a little bit more, just take into account whenever you see a break of one of our key levels, you want to bring the stop back in. I would have hated to see you guys lose, some on the short side because this rebound caught you off surprise. So remember, as we go through each target, taking some off, bringing your stops down, still holding within the confines of this median line formation. If this breaks, talk about it all the time, downside break of a descending channel formation could get pretty messy. The only thing here is that the only low left is essentially the low for this operative retracement we've been working with. And that's 78.97, basically the 79 handle. Okay, here's what CAD yen looks like on the daily real quick too. So this is the premise of the basic trade that we were looking at. You can see really the broader ML formation off that 2015, basically late 2014 highs has been holding extremely well. And this is now a pretty precipitous drop. The break below and the region I'm looking at for today's close is right here. The low day close for the year comes in at 80.60. Okay, we'll have to see if we close above or below 80.60. Close below, you're still at risk for a continuation lower here. But even within the confines of this broader formation, you can see that on the 30-minute, real clean, real tidy within that near-term decline. Okay, so looking to sell rallies while below the upper median line parallel. Look, it's an opening range play. So as we always talk about, market's tendency is to make an opening range extreme on the opens and close, meaning the opening range for the week, put in a high, you can expect the low to come in near the close of the week. It doesn't have to necessarily be Friday, but you get my picture. So a little bit more cautious here. I don't want to slam the shorts from this standpoint. I'd look for a decent pullback or a decent rally to get back on the short side. Long story, that's going to be a major break for support, that low that we made in January. Any questions on CAD yen? Nice healthy 45 pip ATR. Like I said, I published yesterday, we were just above that support level, so I couldn't get any positions in personally. We'll see if we can get a rally here to give us another move. Okay, and we're going to lower, like I said in the report yesterday, we're going to lower our bearish invalidation level. Now gets dropped to the 82 handle. So yesterday we had it at 83. We came into that, we held as resistance and broke lower. Now the bearish invalidation level, or the level that would shift our focus to the upside, is going to be steady at 82. Just checking my notes here. Support 80.88 and 79.80. Yeah. Okay, cool. All right, if there are no other questions on CAD yen, we'll go ahead and move right down the list to the British pound. And certainly has made a move. I personally didn't get much on this trade. I wish I had. I kind of had my focus on some of the yen crosses that were going nuts. And even gold, again, I mean, it's just staggering the size and the magnitude of the move we're seeing here today. That said, here's what the British pound looks like. First on the daily, and then we'll jump into the 30-minute. So what I wanted to just highlight here is the fact that essentially for the week, guys, we're just holding a simple weekly opening range. There's really nothing that's been made. And again, I'm going to bring your attention to the analog that we brought up on the swing side of things that calls for sterling essentially to see a few weeks of range bound price action before we make the next directional break. So not surprising to see some back and forth action here. Long story short, high day close 145.87. That's the bearish invalidation level. Near-term support, 43.73, into that median line extending off of the highs from last year. So the daily chart's very clear as far as what we should be looking at on the range type of trade for sterling. The intraday chart, even cleaner. The idea, and if you guys, again, if you look at the piece from yesterday, the idea was this. We were looking for a spike high ideally into this region to get us entry. Oops. Okay, the ideal scenario is for it to get a spike high here. To complete a 1618 extension off the high. 45.88 is the high day close, so a very good gauge of resistance. When you make a concerted high, you come back and test it for the close to give you resistance. And not only that, heading into the Asia Pac European session, you also had the median line right there. So guys, you know I don't like to work with orders. I very rarely, very seldom put orders for entry. I actually did have one on this, go figure, on the one time that I don't even get it triggered. But I thought this was going to be a really great entry. Long story short, whatever I want doesn't matter, right? At the end of the day, the momentum trigger that we were looking at broke to the downside. You saw a clear, definitive break below the Asia opening range, and we're right back in the initial and objective weekly opening range. Now, one thing I do want to notice this, that break that we made right here at 45.44, or 44.44, excuse me, also constitutes a break of this median line formation. So Mike, does that mean we should be looking way lower from here? Well, let's hold our horses, because again, the opening range low for the week has not yet been compromised. So although we're breaking structural resistance or structural support, we're still within the objective weekly opening range. So I just want to caution there. Also, this is the 50% retracement of the advance. Okay, and I'm going to want to see that break to really validate the continuation lower here in the pound. Otherwise, guys, we could still move here like this and completely negate this formation. Just move right out sideways over the next few days. Not my ideal scenario, now what I want to see happen, but until we get some clarity here, at least a decent momentum trigger, just play the range. Get long near the lows, get short near the highs. That's it. Any questions on sterling? If we do break 43.73, by the way, guys, you have some really nice targets. The 43 handle will complete a basic 618 and a very nice pivot in price. And dependent on time, a basic trendline support off the same low we're measuring coincides with the monthly open right here at 42.47. Okay, so the risk is there on a break. Let me just highlight these for you. Any questions on the pound? Nice wider ATR at least. It's giving us some more juice here, climbing up to 41 pips per scalp on that one. All right, so since we're that didn't work. I have on my notes sell near 45.88. We didn't get that. All right. Since we're talking about the sterling, let's talk about euro pound, which is another trade that we were looking at for the intraday update yesterday. I put out a piece on Daily FX as well. Hope you guys saw that video. Very clean from where we are in a trading standpoint as far as the range. And again, for euro pound, it reacted to a big resistance range. And essentially, we were looking for a short exposure below that 78.48 level. It had some really strong daily divergence. I'm showing an example here of how divergence doesn't necessarily have to dictate time. And today's a perfect example of why we want to be cautious before this. Here's what it looks like. Now, okay, we were looking at this high, next subsequent high, making a series of lower highs here. So momentum is getting tired. Price earlier this week came right into a major key resistance confluence, the 50% retracement. This is a longer dated 50% off the highs. And here's the upper median line parallel and a sliding parallel of the same slope right here. We came right into it and came right off on divergence into resistance, right? Well, lo and behold, obviously the debacle that's happening overnight, you saw much more strength in the euro and the sterling was weaker. That combo, another reversal day to finally tag that 78.89 level. My problem from here is I'm still concerned that you could get a pretty mean pullback here. It's still broadly the same resistance region we were looking at yesterday. Yes, it probed higher to finally give us that tag at 1618, but I still think it's at risk for a near-term, move lower. Maybe that's just me being stubborn, guys. But if this breaks, there's really nothing on tap until like the 80 handle. It's a soft target. More importantly, a key 618 retracement comes in at 80.60. And somewhere in that range is the broader upper median line parallel. Let me just zoom this out for you real quick. So this median line formation in gray. Caught the lows on the break. The lower median line caught the lows exceptionally well. On the move here, the break of the median line itself saw a really nice rally in the trade. If we break that 78.90 level, like I said, a soft target here at 80 at the 80 handle, and then 80.60 is going to be that key 618 from the late 2013 high. Any questions on the on the euro pound before we move off? Here's what the intraday chart looked like. The near-term trigger here that might offer some help. We're kind of too far off the highs already. The only thing I just want to caution you guys with the euro pound is it's a tricky player because it has a very tight ATR and they're sterling pips. So it's still going to have the same impact of a decent trade with a wider ATR. It's just that your margin of error is much less because you have to keep those stops relatively tight here. Still think it's at risk for your turnover. We'll look at that for 78.89 near term. We'll keep that as the bearish invalidation level. On a pullback deeper, I actually would look to get long again. This was the ideal sort of play last night for us to get a spike, pull down to this region for a long. We're not getting that yet. So that's sort of the game plan I'm moving forward with on euro pound. Questions on that? Eileen says, wasn't brave enough to hold a sterling overnight and closed out at break even during the Asia. Yeah, she says I need to be in the UK too to trade it. Yeah, I mean it's going to be the best ideals trading for at least the European crosses. So the euro, the sterling, a lot of those have been giving us the best moves in Europe. I still think, Eileen, the commodity block, the yen crosses, Asia's still the best session. I mean, when I'm writing my report for you guys late at night, I'm usually in and out of positions as I'm doing that. It's just typically my best time as we get deeper into the Asia start. So that was where the Kiwi trade came in last night. That was where we were in the Aussie yen earlier in the week. But yeah, be mindful of the times for sure. Okay. Any questions else on Euro Pound before we move off? On its face, this does look like an objective break of the weekly opening range. So look for this range here. If we continue higher, you're going to look for continuation on that daily chart on the broader topside targets. Yes, I've been trying out the Asia sessions, working out better, but yen is still wicked bad for me. Well, it's a wicked pair, Eileen. It is quite an abomination. There's a reason that we dubbed it that name years ago. All right, dollar Swiss, another one which has been trading in a very clean, tight range, but wasn't quite sure we were ready for a move yet. I just wanted to make sure I got the levels out to you guys as we head into the close of the week here. Tomorrow, you're going to get the retail sales numbers from the United States. Remember, today you get the second day of testimony from Janet Yellen, the Humphrey Hawkins series. She's going to be talking before the Senate Banking Committee today. It was interesting because yesterday she plays a very good. She plays both sides of the argument very good. That they are keeping the door open for further rate hikes. A lot of the exogenous factors that are holding down markets that are causing some of these sell-offs, she says, are still transitory. And she played both sides pretty well, right? So for the dollar, if it holds this support here, this is huge for the dollar Swissy. 100% extension off the high. Excuse me, a 50% retracement off the low. It's from May. And 200-day moving average, all right in there, okay? Add to that this median line formation. Now, it's too soon to tell if this is going to be an operative median line. It looks like the highs are acting very nice with that slope. Can't really tell yet, but you're seeing that there's something here. So for me, I'm either looking for a break below to play it back towards that basic trendline support, more importantly, the key 618 at 95.50, or if you get a break back above 98, which was December low, and that 618, you might get a nice recovery there. You look for a basic retracement to the 50 and 618. So another pair, decent range, it's only 26 pips. So if you're looking just to get your hands wet, it looks like we're building some divergence here. And the game plan that we talked about in yesterday's piece, guys, is very simple. While we're in this formation, the risk is to the downside. It's a downtrend at major support. Okay, hope you didn't get faked out on that move last night, but we're basically still calling this major support. And the play is either a break here and a continuation lower, or a breach of basic channel resistance, and you look to play the recovery into these levels. Ultimately, we would be looking to get short again, but the recovery play would be the onset of a break of this channel resistance, especially after some divergence into the lows. Questions on dollar Swiss. Ricardo, hey Mike, if possible, could you comment about the major support on CAD yen in the monthly chart? Sure can. Sure can. CAD yen monthly. We'll go back to that in a moment, Ricardo. Okay, so let's jump back into CAD yen here for Ricardo. Ricardo, you're looking at a monthly chart, huh? Let's see. I might have a monthly chart, weekly at least. Nope. So the long-term CAD, if you're looking at this monthly chart, the long-term level that you should be looking at is going to be right there at that basic trendline support. A mirror of that same slope actually caught the highs rather well. So that's one thing I'd be looking for on this drop. It's definitely a bearish trade. The one thing I would note that if we do see a close, and it needs to be a monthly close below that 40 level, you're going to see this thing show some fireworks. I'll tell you that much. Look at the last time we broke 40 in momentum on a monthly basis. Okay, it's one of the steepest declines that we've seen in years for the CAD yen. This is back obviously in 2008, 2009, but just to show you a reference of where the monthly oscillator was on that occurrence. Well, here we are again, knocking on the door at 40. So keep an eye on that. I'd be watching that basic trendline support off the lows. A monthly chart for me is a little extreme. Let me just bring this back into like a weekly, give this thing some color. A lot can go on in one monthly candle, I can tell you that much. And I'm not the kind of guy who has that kind of pain threshold where I can look at a monthly candle and see a trade a couple hundred pips against me. But just to look at it even from a weekly basis, it's pretty clean, man. Pretty clean. I believe on this reversal day, what was the close? 83.90 was the reversal day close on that run. Or the reversal week close, 83.90. Interesting. Ricardo, does he have a specific question on dollar or on CAD yen? Let me know. Again, I don't really venture into the monthly chart too much. I think this is just, at this point, you've seen a little bit of an exhaustion trade here. I don't necessarily want to jump in from these levels, but as long as we continue to hold on that near-term chart, Ricardo. I mean, for me, I don't want to even look too deep into it. I'm just watching this. As long as we're in this, look for short triggers, look for rallies, rallies to sell. 82.05 is the bearish invalidation. And it's sort of like the same trade that we're looking at even, I don't want to say it's sort of the same trade, let me take that back, but very similar to what's going on in Euro Pound, right? It's holding a ridiculously long ascending median line formation. On the Euro Pound specifically, this formation was in play for nearly, what was that? Nearly like 11 weeks, I think I counted yesterday. Two, three, four. Yeah, it's the 11th week we've held within this just simple formation here. So for me, we're at resistance. Again, I was at confluence resistance yesterday. Remember that 50% on the daily chart. This is why we were looking for the move to give us a little bit more of a conviction drop into the lower median line parallel in an area here where we'd start to look long again. On this last break, like I said, it technically invalidates us because we went above that high day close. Momentum is still showing divergence on that move. If you get a trigger break and we get back below that, I wouldn't be against trying to at least, start to try to press some shorts again here on the Euro Pound. And if this is the high, we don't have conviction of that yet, but if this is the high, I'm going to go ahead and adjust our median line. And actually, now the median line offers a really much nicer pivot in price. So in a broader scheme of things, pick that up right there. Ricardo said, that's perfect. Thank you. You're more than welcome, sir. Gary, great to see you. Says, Mike, the abomination, bet that's been beating up many people. Not me this time. I wonder, did you use SSI? Thanks from Gary for the abomination killer, Mike. All right. So, Gary, I don't. If you're asking me personally, SSI is something that can be extremely valuable. I think in a little bit more of a medium-term trade outlook. Just because you're not going to see on an intraday basis per se, it does happen, but you're not going to see on a normal, regular intraday basis too much fluctuation in SSI. SSI becomes very interesting to me when the net exposure flips from long to short, or if SSI is an extreme net long or net short. So unless we're at one of those extremes, for me, I'm only looking to be in a trade for what? it can vary from 10 minutes to 5 hours. SSI is not going to be something I'll be able to track minute by minute to really give me a tell. So I personally don't. As far as the yen crosses are concerned, though, Gary, I do want to tell you SSI is notorious, always been weighted on the long side for a while. It kind of fluctuates, it comes back now that we've seen this back and forth action. But I've seen times where SSI for dollar yen has been at the extreme for months, right? So what does that mean? It's not going to necessarily, it might validate the bias I'm looking at, which is great, but it's not necessarily going to help me with a trade setup. Again, don't get me wrong. I like to always have a glance of SSI to see where we are, what the market positioning, and specifically what the open interest is more important for me. But for my intraday positions, maybe not so much. Gary, does that answer your question? He says, it does. Many thanks. Cheers, sir. All right, so I just want to take another look back at gold and just see where that's been going here. When's the last time gold went this high into overbought? No, we're even higher than that peak that we made in late 2012. We're even higher than that. Okay, so this is the highest point since the financial crisis in momentum for gold. Okay, that's an important tell. In fact, this is not to say that we're going to move lower from here. It's the exact opposite, guys. This is to say that we may, in fact, be seeing a broader shift or turnaround in gold for the medium term. Okay, wouldn't be surprised to see this thing rally as high as a basic trendline resistance dating off the all-time record high we made. Again, dependent on time, that's going to be somewhere between 1350 and 1400. But when we're in very strong momentum markets, okay, we're in very strong trending markets. This is actually a very healthy development. You can see that we haven't hit an overbought condition this high since basically this stretch that we're making here. But prior to this, you got a lot. You got a lot of times the market came into overbought conditions that high, and that just suggests that the broader uptrend is intact. So now that we're making these breach higher again from here immediately, yeah, you could see a mean reversion type pullback, but you'd expect to find that support ahead of 40, and you'd expect to find the next rally to get you much higher in price and get you right back above that overbought condition. So in quick lessons here, in strong down markets, you want to see oversold, oversold, oversold. You want to see that, okay? Strong up markets, you want to see overbought, 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 overbought. So just a cautionary note on what gold could be doing, where we could be moving here longer term. A quick also reference to the basic channel that we were looking at. This is just off the March highs of last year. That also broke on this move, surpassing 1200. From a weekly standpoint, you might have seen this chart. Oh, by the way, crude is at support that we talked about yesterday, 2650 to 2618, and the median lines. We circled that region right here in the webinar yesterday. We broke through, obviously, yesterday on the close of the market. We broke through that low day close that we were eyeing for support. This is the final target. Beyond here, guys, I don't even have anything. We'd need to get really a little bit more in-depth analysis to find levels sub 2652, to be honest with you. But to jump back, I'm sorry to jump back and forth, but to jump back to the gold weekly chart. You might have seen this published on the quarterly forecast that I write with Ilya every quarter for the gold trade. This was bearish invalidation. We broke right through the 52-week moving average as well. There's that resistance that we made. Nice pivot in price. This was the low week reverse, or the low week close for 2013, actually, right here. It was a nice pivot all through the last couple of years. We're now surpassing that, testing basic trendline resistance off that 2013 high, specifically in August. Questions on gold. And there's, whoop. And like I said, there is crude as well. Big regions, both coming in some really interesting regions. A quick segue, I had notes here on Aussie yen that I wanted to review with you guys. This is also from earlier in the week. Okay, so Aussie yen saw some massive crazy volatility last night. I didn't have any positions on this pair, but I just wanted to show you, this is the setup that we talked about early in the week. We're just looking for a downside break of this median line formation. We got that late last week, and we're looking to play the correction. I had no expectation for this thing to get any lower than basically the low day close near that 80, 90 level. Here's what the intraday charts look like for Aussie yen. Okay, so again, there's your weekly open. You set a weekly opening range low first couple of days of the week. Couldn't get it back above that 82 pivot, broke to the downside, but we magnetized right back. So again, the yen is a very tricky player here. You stay bearish, in my humble opinion. You still look lower, sub 80 handle, 79, 91, 80, 03, this region here. So I would be looking for some resistance into this region. Bottom line, as far as the Aussie is concerned, you're still looking to sell rallies. And a downside break of a descending formation can sometimes be the sharpest move. So if we end up closing below that 79.20, which was the low, you're likely to see this thing drop much, much lower. Okay. Yep. Remember, guys, your epitome of the risk-off trade. Okay. Epitome of it. You've got the Aussie, calm currency that has heavily weighted on commodity prices as well, which have been dropping. Then you have the yen, which has been catching a really decent safe haven bid on the volatility that we're seeing recently. Question here says, can you cover Aussie dollar 2 similar to Kiwi dollar? Aussie is actually, it's a good thing you bring that up. It actually is similar. Why isn't Aussie strong like gold? Ooh, Eileen, be careful with that assumption. Okay, be careful with that assumption. Yes, they are one of the largest gold exporters. Yes, gold strength should help the Aussie economy, but we can't correlate it like that still, guys. Remember, Aussie is still one of the highest yielding currencies on an interest rate basis. Goes to the daily first. Aussie's been kind of messy. I'm just going to preface this. I haven't really been too excited about it recently just because it's kind of been sailing through some of our levels, getting a lot of these doji-like pinhead bars, and it's kind of a chop fest. It's not even that well of a defined range. The start of the month did have a decent range until here, until on Tuesday. This thing started making new lows. We checked the highs. We kind of drifted out of this basic channel support. So I'm not really too keen on Aussie. In fact, if you look at the median line, or if you look at the momentum just on a basic objective level, you're kind of just straddling 50 there, right? Not much of an opinion one way or the other. So the clearer part of the trade, I'll say, is going to be that near-term structure in the 30-minute. This is just a great drill, guys. I encourage you guys to do this at home. Just find a basic slope for a decline or structure to some sort of decline, and extend some parallels and see if you've been seeing pivots. Well, when we did this yesterday, just taking that last couple of highs we made into that start of February, extrapolate that off some major peaks, major highs and lows, you can see really nice pivots in price, right? So in fact, this last pivot looks like it caught that pullback there. The low and the weekly opening range low is still 69.85, basically just below the 70 handle. Okay. And on that splash lower, below the initial weekly opening range, 70.30, 70.37, we were looking for support. That break to the downside, look where it found support. Key 618 retracement of the advance. More importantly, basic resistance mirrored to the lows that we made there. support, pivot, 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 break, support, support, support. All right. So I understand a lot of guys are going to start looking at this and saying, hey, Mike, doesn't this look like a possible head and shoulders formation? And you're absolutely right. If you're thinking that, I'm on the same boat. For us to make a type of trade on that, we would need to see a break of this neckline. Okay. Or even just basic break of that low would put me in a more structured decline or more conviction bias, let's call it. Looking to target again that A6826 level, which is the actual stretch low. Eileen, does that help on gold? I like Kiwi a little bit better. I still like Kiwi a little bit better. You might get another rally into that 200-day moving average. Watch that there. Maybe another opportunity to get back on the short side. Again, I'm still holding a small position on the short as well. So we'll see if we can get that bid near the 200. Okay, a quick just real review of euro dollar as we get into the last part of the session here. Here's what the 30-minute looks like. I did just want to note this. Yesterday we were talking about that slope resistance that offered a nice pullback in price there. Well, on this decline, guess where we found some support? Right at the weekly open. Okay, came back, found that support again, broke right back through that pivotal threshold at 1250, 1263. That's still your near-term support structure. Okay, even though we've kind of went through it twice, it's a really big fib confluence, and I like that a lot. Just above 1382, 1385 is the next resistance target. And again, there's been no change to any of these levels from Tuesday's report. So if you go to the intraday charts page, there's a link for the update on the euro earlier in the week. Okay, any questions on anything before we wrap things up for the week? CAD yen, euro dollar, I've been watching. The Aussie yen we reviewed real quick as well. Keep your eyes on Kiwi. Looks like we might get stopped out on this move right here for the next short, but it was much less aggressive than the one we took last night. Watch the opening range here for US. We'll be looking for, again, some of those ranges to give out, and keep an eye out on this broader risk sell-off. It could get pretty vicious. Keep nimble. Okay, stay nimble. This is not the time to get an aggressive stance on any which way. So I just want to caution you guys on that. All right, guys. So have a great weekend. I wish you all the best. Eileen says, can you talk a little bit more about how you scan the trade for setups? So like I said earlier in the week, Eileen, I have a book, a little Bible, we call it, me and Jamie, with all the setups that we're tracking, right? So when I come into the Sunday open for the market, I'll go through all the setups that I've been talking about for the last couple of weeks, see where they are. Is the setup still viable? Is the structure of the decline or the advance clear and ascertainable? If it is, we'll continue to track it. If it isn't, you're starting to get a lot more back and forth and such. Well, then maybe we sit on the sidelines, right? We look for other opportunities. For me, I literally, it's not something I'm going to advise you guys to do, but for me, I literally go through every single one of these charts every Sunday just to see if there's anything that's kind of popping out at a major key resistance, major reversal, or something like that that we want to shift our attention to. But we do the work so you don't have to, Eileen. But that's just how I kind of get a gauge of what the market's been doing heading to the start of the week. All right. Okay, we'll wrap it up there, guys. Best of luck trading, and I will see you on Monday. Don't forget the public webinars on Daily FX, and on Tuesday, Wednesday, and Thursday, right back here on SB. Have a great weekend, guys. Cheers.